Hello everyone. I believe that we can start already. And I hope that Michael will also appear here on the board as soon as possible. Anyway, today we are here to discuss the UK retail sales. As I mentioned already, me and Michael are here to cover it for you. Um, as you can see at the current moment, the forecast stands at 0.6%, while the prior figure was at minus 0.6%. So of course, mentioning a little bit about the history of the indicator, I would like to remind you that UK retail sales dropped steeply in October as the hype surrounding the Rugby World Cup died down. The shoppers kept cash aside to snap up some Black Friday bargains on the November 27th. However, sales increased 3% year-on-year in October, according to the Office of National Statistics. At the current moment, UK retail sales are expected to rise 2.3% in November compared to a year ago, according to analysts ahead of the figures today. So also analysts forecast the latest report to show a month-on-month gain of 0.6% in November, marking an improvement on the previous month's decline, boosted by Black Friday and Cyber Monday sales. According to HSBC analysts, this year they think the growth will not be as strong, with less intense discounting and reports of lower footfall than last year. Of course, online shopping could be strong, but non-store retailing accounts for just 7% of the retail sales basket. Let's move on. Let's take a look at what the experts have to say on the matter. So, of course, here you can see different experts from different banks and institutions giving their estimates. And according to their views, we have the Bloomberg survey summary, where the median estimates, as you can see, stand at 0.6, average also at 0.6, high estimate is 1.1%, while the low estimate is 0.2%, and the total number of estimates has reached 23 this time. Here I would like also to mention a couple of comments from different banks. First of all, from Danske Bank, they say that we expect UK retail sales, excluding fuels, to increase 0.3% month-on-month in November, which is more or less in line with the consensus month-on-month estimate. While Chris Williamson, chief economist of the financial data provider market, says that further spending growth is likely in the coming months, for the short term at least. The longer-term outlook is more uncertain, being dependent on trends in inflation, wages, and interest rates. Of course, very important here to mention our Dukascopy community member sentiment on the sterling versus the US dollar currency pair, and we can see that at the current moment the traders are on the bullish side at 62.5% bullish votes versus the 37.5% bearish votes. And of course, as always, you can see a couple of comments here. William B. says that retail sales in the United Kingdom fell 0.6% in October from September 2015 compared to a downwardly revised 1.7% rise in the previous period, and worse than market forecast, mainly due to a 1.3% slump in food store sales. Thus, William expects an improvement of this data because it is an index with a high volatility, and after a month of saving, consumers will be forced to shop. Let's also hope that it will be like that. And the bearish comment, I'm not going to read it anyway. I hope you can read fast, because right now I have to pass the floor to Michael, who will cover the technicals. So, Michael, please.
Hello everyone. So today we also have the table currency pair for the UK retail sales release, and I've also chosen the positive surprise trading strategy, hoping that we will see a better reading and thus see the cable go up. Not much has changed since yesterday in terms of the sentiment and the orders. We still have a bullish sentiment, but now it's 64%, so slightly higher than yesterday. With the sterling being bought in even more percent of all cases, namely 66.55, and the US dollar being sold in almost 53% of all cases. In the 50 pip range, we have 63.16% of orders to sell this cable, so slightly by 3 percentage points less than yesterday, and in 100 pip range it's 61.5%, also approximately 3 percentage points less. So other market participants are also mostly bullish on the sterling dollar. The rand has 58.11% of traders holding long positions compared to 54% yesterday. Saxo still has a bearish sentiment, but a lot weaker than yesterday, since there were approximately 68% of bearish traders, and daily FX has also a stronger sentiment today. 64% of their traders are also bullish. So moving to the market reaction table, where we see the market reactions for the previous 5 UK retail sales releases. The largest reaction was 55 pips, and the smallest one was only 21 pip. So also the data mostly disappointed, with falling in line with expectations only once, and also being better than expected also once. So the average reaction we could expect today is around 33 pips, and based on this reaction we set the take profit and stop loss levels accordingly. And we also seen the pairs currently fluctuating. The volatility is really high, so I already adjusted the take profit and stop loss levels twice, and I'm guessing we'll have to do that again since the price just keeps rising. And right now I have the take profit level set at 1.5017, but we can move like 5 pips higher to verse 22, which is even better since we have the daily pivot point at this level, which is bolstering the giving resistance, and also the stop loss 5 pips higher towards 56. Here we have the 55 and 100 period simple moving averages, which are also reinforcing this support. So in case the data does fail to meet expectations, and there is a quite high chance that will happen, we could see a decline towards this area, and possibly even beyond this level, since the pair was determined to test the current patterns, which is a broadening falling wedge, the lower trend line of the pattern. At the moment it still lies out of reach, but it could be tested by the end of the day. So with just over 45 seconds left, I'll mention the technical indicators, which are giving us mixed signals in most of the time frames. Well, actually, bearish signals in most of the time frames, with mixed only in the 10, 30, and the daily time frames. But as usual, the most important one is the 30-minute time frame indicator, since it was updated 30 minutes ago specifically for the data release. And same as yesterday, unfortunately, it's not giving us any precise sense of direction, so unable to confirm the scenario, so we just have to wait for the data until it is released, which should happen right about now. And hopefully I can mention some of the top forecasters, such as the Commerzbank. They expect a really high reading of 1.1%, and judging by the slight reaction, I'm guessing it was better, or actually not. Oh yeah, the retail sales was better than expected, with the initial reaction being only around 18 pips, so almost twice less than expected. And And yeah, the year-on-year data is also a lot better, both in the retail sales and the core retail sales. So meaning the one including fuel and excluding. Uh, so yeah, the data was better, but still we didn't see the expected reaction. The first one was only 18 pips, unfortunately, because of most likely of the hype after the post-Fed uh, interest rate hike decision. So that is a major factor that plays in the cable's role as well. And that will be all from my side. I guess back to you, Kate.
Thank you, Michael. Thanks. Well, yeah, see, guys, the data came out really better than expected. Year-on-year retail sales were at 5% in month-on-month at 1.7. I'm already also lost in all these numbers. Yes, I hope you had great trades and see you later. Right now, it's all from our side. Bye.